Warren, we did receive a lot of questions this year related to Berkshire and just some of the things that are going on there. Let me start with one that comes from Jay Sheth. He asks, you've been critical of LBOs in private equity in the past, leveraged buyouts in private equity in the past, yet you are partnering with 3G and leveraging Heinz. Does this indicate a change in your view on LBOs and on private equity?
Yeah, this is a partnership that's buying a business to keep, and our partners like the idea of some leverage in it. We don't like leverage as much, so in effect our preferred stock is providing some leverage to their common. So instead of having loads of debt providing the leverage, we have our preferred stock, which is equity and carries no threat to the capital structure. But it is not a private equity deal. This is a business to own. Berkshire will own Heinz 100 years from now, and there's no thought on Berkshire's part of selling a share. There may be a few people in the Triple G group that decide that they want to sell at some point, and if they do, I hope we get a chance to buy more of it. But Heinz is forever as far as we're concerned.
In your letter, you pointed out that the preferred shares have more than just the higher yield that they're bringing in. I mean, this is also something that brings you warrants to buy more of the stock? Yeah,
we have a 9% preferred, an $8 billion issue. We have a call price on that preferred, and eventually it will get called, and that provides some extra yield because the call is at a premium. Probably provides another point a year, and then on top of that we get 5% of the fully diluted common, basically for nothing for buying the preferred. It's a deal that it's a very fair preferred, but it does create extra leverage for our partners, 3G. Meaning they only have to put up $4 billion for their half the equity, and they get more play. If Heinz works out as we expect, they will get a return higher on that common than we get on the preferred, but we'll do very well on the preferred. And by having that preferred in there, we minimize the amount of debt leverage. So this is not something that's where there's debt to the ceiling on it.
Several people had written in about how this is different than your usual acquisition by partnering up with someone. Normally you look at a business where you want to keep the management that's there, and you look at that and it's a long time add-in. Why do this with 3G?
Well, 3G, I've known Georgie Paulo Lemon for a dozen years. I know his associates. I think they may be the best managers in the world. So, and incidentally, they're getting no extra ride from managing it. So there's a 3% carve out for management if they meet certain performance targets. But I would love to have that group manage any business that we have. And so they are the managing partners. We're the financing partners. And to me, it's a dream. I mean, we get terrific management with them. Management I couldn't buy, and they get somebody that can finance it with a phone call, which makes it very easy from their standpoint.
Is that 3% of annual net income or something?
No, it's the ability to buy 3% of the common if certain performance levels are met.
Okay. Let's get to another question. This one is from Jeff Verdun. He writes in, with the recent purchase of Heinz, are you worried that Berkshire will ever become too diversified and will end up having to sell off companies like other former diversified companies, including Coca-Cola and General Electric, because they strayed too far off of their core business?
What was the last one?
They strayed too far off of their core business.
No,
I guess
we have managers that are running their core businesses. Yeah. At the railroad, we have Matt Rhodes. That is his core business. We have Greg Abel at the energy business. That is his core business. So we have, before this deal, we had 8 different companies, each of which would be a Fortune 500 company if owned separately. And they have Fortune 500 type managements. And those people are managing the businesses they want to manage. That's the same situation we're going to have at Heinz. So we couldn't run Berkshire from the top. It's not designed that way. It's designed to have a group of businesses that are run by people that love them and that know how to run them. And it's their goal in life to run those businesses. Their goal is not to run Berkshire. Their goal is to run the railroad or whatever it may be. So it's an ideal situation. I just stay out of the way.
Okay, let's get to another question. This one comes in from Bill Breach, who writes in, regarding the unusual Heinz options activity prior to the announcement of the acquisition, can Mr. Buffett describe Berkshire's procedures to try and prevent premature leaks of insider information regarding prospective acquisitions? There have been a lot of questions about that.
Yeah, well, we try to minimize who knows about it, but you're always going to have your lawyers know about it. Our auditors don't know about it. We don't consult them. Our CFO is going to know about it. My assistant's going to know about it. So, and that's true with the other parties as well. Mm-hmm. In this particular case, you had 4 investment banking firms. You had 2 commercial bankers, and you had people at our place at 3G, and so a lot of people end up knowing that. That's about it. That's why I like to push these things through as fast as possible. And obviously, I will guarantee you that person that bought it on Wednesday bought those options. I mean, that is inside trading. I mean, they're going to nail that guy, and they should. We were doing great up to that point. If you looked at the Heinz stock behavior, it did not outperform the market or anything. I thought we were going to get there. And even on that Wednesday, the day before we announced, the stock, I believe, was actually down. But that options trading clearly reflected somebody that knew something. And it'll be very interesting to see who it is. We've never had a big problem. We had the situation in Lubrizol, but that was a different sort of situation. We've never had anybody at Berkshire that all the deals we've had that has been involved in insider trading.
Very quickly on that point, let me bring in another question from a viewer. This is from Harvey Cohen. It's number 13, Control Room. He asked, what was the total legal bill to close the Sokol affair?
Well, that's a good question, and I can't tell him the answer, but it was more than I would like. Because we had our own legal bills, we had his legal bills, and it's not totally done yet in terms of legal bills. But if I had to guess, and I'm really guessing here, I would guess maybe $4 million or something like that.
Have you spoken with Dave Sokol since the affair?
I have not spoken to Dave Sokol for a couple of years.
Okay. Joe, I know you had some questions too.
Yeah, I did. I was just watching Warren with that answer. I mean, $4 million is not a lot, obviously, for Buffett or for Warren, not a lot of money, but I saw the pain on his face, because $4 million to him, as he has mentioned, I mean, there it is again, $400,000 would have, he's like, I can just see him just, anyway, Warren, so.
You're getting closer, Joe. Keep going.
In the past, you have made the point that it's better to buy a great business for a fair price than a fair business for a great price. And I know that Heinz probably fits into that again. But, Warren, Heinz when was it founded? Like 1870 or so, 1869.
1869. Yeah, they went broke, and then that company, but the successor that was founded shortly thereafter.
Well, it's been a great business for a long, long time. And I don't know about your price. I guess you probably paid a fair price, but I'm just wondering, sooner or later you have so much money at Berkshire that you have to deploy, and you find companies like Heinz, but you could have made this acquisition any time in the last 20 or 30 years and probably gotten a fair price. I think that your partner definitely made a big difference here.
Yeah, he did. No, there's no question about that. No, we would not have done the deal if we hadn't been in partnership with Georgie Paulo.
And it made sense just in terms of being a brand that you can just leverage globally, and he's a guy that can leverage it globally. So it makes sense that way to me. Okay, I got it now, because it doesn't seem that profound to me to buy a brand name ketchup. I can give you probably 10 or 15. You might as well buy Twinkies too while you're at it. Get in the auction bidding for that too. But just as far as a brand name company at a fair price, you got a whole shopping list.
Yeah, there's not too many that are big, but you're right. We've owned Coca-Cola, but we've only owned 9% of it now for, I don't know, 25 years or so.
Yeah.
But you're right. We would not have done this. We would not have done this at this price without being partners with Georgie Paulo.
All right.
Will
you throw Bloomberg under the bus once and for all? You mentioned Coke again. I mean, for that ridiculous. I mean, you can't even order a pizza with a party and get a Coke in a 2-liter bottle. I mean, it's just, if that is not, an anti-state run amok, if you won't say that for me, I don't know if I'm going to ask any more questions.
Well, there's 200 calories in that 16-ounce bottle that he will tolerate, but he doesn't want to tolerate more than 200 calories. I have seen certain people, unnamed, but public officials, who have eaten more than 200 calories of dessert at one time without having to order a second serving. The real question, I can eat 27 or 2,800 calories a day, and I've been picking those 27 or 800 all my life, and it seems to work reasonably well. If I'd eaten broccoli all my life, I'd probably be in some mental institution.
Yeah. Andy loves salt. Andy flies around, with a big carbon footprint, and it just looks like let them eat cake. It looks like I'm here, like a king, and I'm looking at my subject. What? Yeah, I'm a king, and my subjects have to live differently than I live because they're too stupid to make their own decisions. It galls me, Warren.
I think you should pick 20, whatever your metabolism rate is, and you should pick 2,700 or 2,800 calories.
Right.
And you ought to have and
I'll eat filet of fish if I want. I'll eat 2,800 calories worth of McNuggets if I want. Or Twinkies.
Or ice cream. I do that. Some days I just go through a whole gallon.
Wow. All right.
What are you eating for breakfast this morning?
Well, I'm having a cherry Coke here. There are about 200 calories in this, but I got some Oreo cookies here.
What size is that bottle, Warren? What size is that bottle, Warren?
This bottle looks like 16 ounces. I'd guess.
No, it's bigger.
No, I think that's I think that's a 20 ounce.
If it's a 20 ounce bottle,
you can't have that.
200.
You can't have that. Put that back. You know where you can have it? Myanmar. But you can't have that in Manhattan.
Yeah, well, we can have it in Omaha. And we'll continue to have it in Omaha.